Welcome to another FAR walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over FAR Area 1, B2, and the topic is an application topic, adjust the statement of activities for a non-governmental not-for-profit entity to correct identified errors. And we're going to be doing that the SuperfastCPA way, which is diving straight into questions. If you don't know much about our strategies, the idea behind SuperfastCPA is cutting straight to the things that you will be doing on test day, practicing questions and sims, because that's the best way to learn the material. It's not watching lectures, it's not reading through a big textbook, it's diving straight into the questions to learn what you need to know. So that's what we're going to be doing today. And just letting you know, we will only be going over 5 questions today, whereas SuperfastCPA members will have access to the full 10-question video when we post it in the members forum. So if you like this, you can get more of it by becoming a SuperfastCPA member. And just before we jump into the questions, I want to remind everyone about our SuperfastCPA training webinar on SuperfastCPA.com. It's only 1 hour and it's free, and we will teach you the key ingredients to passing the CPA exam. These are the things that will help you be effective and efficient with your study time so that you can study less and get more out of it and not waste any of your time failing exams. With that, let's dive straight into the questions. Alright, here we are at question 1, and something I haven't been mentioning but is a big part of the SuperfastCPA strategy is going to the bottom of the question to know what the real question is behind all of this information so that we can have that context as we read through the rest. So let's read this last line here. Which of the following errors most likely explains why the net assets without donor restrictions total is incorrect? So we know right away that we're looking to figure out why the net assets without donor restrictions is incorrect. And we know it's incorrect because it's telling us it's incorrect. So now that we know that, let's go ahead and read through the rest of this to pick out what's important. Given the following information from the Statement of Activities for Greenfield Foundation, a non-governmental not-for-profit entity, we have contributions with donor restrictions, and that's the capital campaign contributions, contributions restricted for scholarships, contributions restricted for endowment, and then we have the contributions without donor restrictions, and that's annual fund contributions and unrestricted bequests, and then we have the expenses for the year. We have program service expenses of $600,000, management and general expenses, and then we also have net assets released from restriction for scholarships and also for capital campaign. So we have a whole bunch of information here, and supposedly this is supposed to end with net assets with donor restrictions of $500,000 and net assets without donor restrictions of negative $400,000. So again, these are the changes to net assets. That's what the Statement of Activities is trying to show us, is how much each of these change. So this is the positive change for the with donor restrictions and the negative change for without donor restrictions, according to them. But we know there's an error, so we need to figure out what is the likely cause of that. We have a few different options here. It could be the capital campaign contributions being incorrect. It could be the net assets released from restriction being applied incorrectly, the contributions restricted for endowment. There's a whole bunch of different things that it could be. Now, the idea behind SuperfastCPA is we're using this to learn. So if you don't know how to do this, there's no point in wasting time or spending 10 minutes trying to figure it out when you don't actually know how to do it. Again, if you don't really know how to do this, let's dive straight into the answer to start learning the crux of what it's trying to teach us. And so here is the answer. The correct answer is B. The net assets released from restriction were not properly reclassified from net assets with donor restrictions to net assets without donor restrictions. Okay, so that's the answer. If you don't know what that means, you may not have watched the previous videos where I talked about the purpose and how to prepare the Statement of Activities. So this might be a little confusing if this is the first video you're seeing from us. But let's read this explanation and kind of work through it together. When net assets are released from restriction, they should be reclassified from net assets with donor restrictions to net assets without donor restrictions. If this reclassification did not occur, it would result in the net assets without donor restrictions being understated and the net assets with donor restrictions being overstated, leading to the incorrect totals provided. So that's why they have the wrong totals, because they didn't release things from net assets with donor restrictions to net assets without donor restrictions. So let's kind of walk through what that even looks like. So let's work on figuring out the net assets without donor restriction. We have these contributions without restrictions, so that's 200 plus 100, that's $300,000. And then if you remember, all expenses reduce net assets without donor restrictions. So we have $300,000 here, then we subtract the service expenses, the program service expenses of $600,000. Then we subtract the management and general expenses of $100,000, so that's $300 less $700,000. That's a negative $400,000 of net assets without donor restrictions, or at least the change in net assets without donor restrictions. And that's what they have right here. But then we have to remember that the net assets released from restriction reduce net assets with donor restriction and increase net assets without donor restriction, because they're trying to cover these expenses that were related to a specific project or a specific restriction. So we take this $200,000 and this $200,000 that were released and add them to the net assets without donor restriction, leaving us with a net assets or a change in net assets without donor restriction of 0. Because again, it was negative $400,000 from these additions and these expenses, but because these $400,000 of expenses were related to a specific restriction, they moved net assets with donor restrictions of this amount, of this $400,000, to the net assets without donor restrictions to cover it. So in the end, you end with the $0 of net assets without donor restrictions, or at least the change of net assets without donor restrictions, because again, that's what the statement of activities is. It's showing us those changes. All right, that was the first question. Let's go to the next question. All right, here we are at question 2. And again, just remember, before you dive too deep into something, you want to read the ending sentence so that you know what to be looking for as you're going through the questions. So let's scroll down a little bit right here and see what are the correct totals for management and general expenses and fundraising expenses after identifying any errors. So we're trying to figure out what the correct management and general expenses and the correct fundraising expenses are for the year. Now, with knowing that, let's go up here and be thinking about, or maybe adding up, the different things as we go. Given the following information for Sunrise Foundation, a non-governmental not-for-profit entity, we have the statement of activities information here. They are saying that they have total program expenses of $560,000 and total support expenses. And remember, that's management and general, fundraising, membership development. Mainly it's management and general and fundraising, by the way. That's what you'll most commonly see. And they have that total here, $350,000. Oh, and I just fixed that because I remembered that because I realized that I typed that in incorrectly. But again, this should be total support expenses, $340,000, $210,000 plus $130,000. Okay, so that's what they're saying that it should be. Now let's walk through this. Program expenses, we don't necessarily need to think about that because that's not going to be affecting management and general and fundraising. Now, for the management and general expenses, we want to see if all of these are correct. $100,000 for administrative staff responsible for general operations and clerical work, $50,000 for legal and consulting fees related to the overall management of the foundation. As we're reading through these, think about if they sound like they should be in management and general, if they should be in fundraising, or if they should be in program. Let's keep reading. Fundraising expenses, they have $70,000 for the costs associated with organizing the annual fundraising gala. They have $20,000 for office supplies used by the administrative team. They have $30,000 for a public awareness campaign fulfilling the foundation's mission. And then they do have some split expenses that are going to be split between the different ones. They have $60,000 of rent. That's for both program and administrative. They have $40,000 for utilities, and that's again split evenly between program and management. They have $30,000 for IT services, and that's split between program management and fundraising. So with reading through all of that, again, that's a lot of information for us. Now here are the options. What are the correct totals for management and general expenses and fundraising expenses after identifying any errors? So again, we're trying to figure out if all of this is correct. So pause the video, maybe go back if you need to see all the information that we just went through. And when you're ready, come back after you've kind of thought about this, and we'll look at the answer together to get a better understanding. All right, the answer is B, management in general should be $230,000 and the fundraising should be $80,000. So let's walk through this. Upon reviewing the expenses, the $30,000 public awareness campaign, originally classified under fundraising because, public awareness, they're trying to get people to know that they should contribute to the fundraising, but it was specifically for the mission of the company, of the organization. It says it right up here that it's specifically for fulfilling the foundation's mission. Now, with that wording, it definitely makes it sound like it should be in program expense. So that should be reclassified from fundraising to program expense. So that reduces the fundraising to $100,000 and increases the program to $590,000. Then there's the $20,000 of office supplies, and that was incorrectly included in fundraising because it should have been in management in general because it was specifically for administrative staff. And so that should reduce the fundraising to $80,000 and increase the management in general to $230,000. And then, by the way, these numbers right here are including the following below, the split expenses calculation. It's including portions from each of these. So there was $60,000 of rent split evenly between program and administrative, which is technically management and general. So that would mean that $30,000 of that goes to management and general. There was $40,000 of utilities, again split evenly between program and management, so that's $20,000 that should go to management. And then there's $30,000 of IT services split between program, management, and fundraising, so that means that it evenly splits $10,000 to each of them, so $10,000 goes to fundraising and $10,000 goes to management and general. Now, again, these amounts are including the split calculations, these corrections, and the original amounts up here. So don't forget that this $150,000 is supposed to be in management and general. This $70,000 is supposed to be in fundraising. And then we have these corrections down here and the split expenses, and that's how you get to these totals of $230,000 and $80,000. So the idea behind this question is making sure that you classify all of the expenses in the correct areas, whether it's program or some kind of a support service, and also make sure to pay attention to the expenses that are going to be split between different services so you know how much to allocate to each one. All right, let's go to the next question. All right, here we are at question 3. Beacon of Hope Foundation, a non-governmental not-for-profit entity, has the following expenses recorded. Okay, before we dive into that, what should the ending amount for expenses with donor restrictions be? So keep that in mind as we read through this. They had expenses for salaries and wages, rent, utilities, program supplies for a donor-restricted grant, fundraising event costs, legal and audit fees, marketing and advertising, capital improvements funded by a restricted donation. So again, they give us the expenses with donor restrictions and the expenses without donor restrictions. This is what the company has calculated. What should the ending amount for expenses with donor restrictions be? Now, if you've watched the previous videos, we have talked about this, and it's a pretty simple answer, a pretty straightforward answer if you know the rule. If not, that's okay. Again, we're going to dive straight into the answer to learn how this works. All right, the answer is D, $0. That's how much should be in the with donor restrictions expenses. Let's walk through this. All expenses except investment expenses, which, by the way, you probably won't deal with too much for the CPA exam or at all, should be classified as without donor restrictions. However, once any funds are spent in accordance with the donor's restrictions, such as $75,000 for program supplies and $100,000 for capital improvements, those amounts are reclassified out of net assets with donor restrictions to cover the expenses without donor restrictions related to that specific restriction. Therefore, the ending amount for expenses with donor restrictions should be $0. So, again, all expenses except investment expenses, which you will hardly deal with, reduce net assets without donor restrictions. So even if you see something that's related to a specific restriction or a specific program, the expense itself is going to be an expense without donor restrictions. And then if it is related to a specific restriction, they will release funds from net assets with donor restrictions to cover that expense, and it will be released and put into net assets without donor restrictions. But again, the expense itself, there are not expenses with donor restrictions, and unless it's investment expense, and that will be kind of related to the investment itself. Again, you won't deal with that too much, so that's the rule. All expenses reduce net assets without donor restrictions. Let's go to the next question. All right, here we are at question 4. Harmony House, a non-governmental not-for-profit entity, received the following donated services during the year. Here are the donated services, but before we do anything else, based on the requirements for recognizing donated services at fair value, what should be the correct amount? So we're trying to figure out which of these donated services can and should be recorded at fair value. Now let's read through. Legal services valued at $25,000 to assist with the lawsuit that the foundation was involved in. Volunteer hours valued at $15,000 for general administrative tasks. Accounting services valued at $20,000 to help prepare the foundation's financial statements. Graphic design services for creating promotional materials for a fundraising campaign. So which of all these should be recorded at fair value? And once you figure that out, what is the total amount that should be recorded at fair value? They're saying it's $70,000. Pause the video. If you know how to do this, do the calculation, and when you're ready, come back. We'll look at the answer together. All right, here we are at the answer. The answer is B, $55,000. That's the amount that should be recorded at fair value, or that can be recorded at fair value. According to accounting standards for not-for-profit entities, donated services should only be recognized if they, 1, create or enhance a non-financial asset, and 2, require specialized skills and would typically need to be purchased if not provided by a donation. And there is an overlying thought that you need to have here. It has to be measurable. You have to actually be able to calculate the value of that service. It can't just be something random that the person's never done. They have no idea how much to charge, things like that. It has to be measurable, but that's kind of a given. So the real rules are it has to create or enhance a non-financial asset, and requires specialized skills that they would otherwise have to purchase. So in this scenario, the legal services and the accounting services are both definitely specialized that would typically need to be purchased if not donated. So of course, those need to be recognized as fair value. Same thing with the graphic design services. This is something that they would probably have to purchase otherwise, and it's very specialized as a skill, so that would also be recognized. So $25,000 plus $20,000 plus $10,000, that's $55,000 of donated services that would be recorded at fair value. As far as the volunteer hours for general administrative tasks, these do not meet the criteria for this fair value recognition, as they are not specialized and do not create or enhance a non-financial asset. It's just general service that they're providing. It's great, but as far as recording it at fair value, they can't record these volunteer hours at fair value on the statement of activities. So the answer is $55,000. Let's go to the next question. All right, here we are at question 5. The New Horizons Foundation, a non-governmental not-for-profit entity, has recorded the following expenses under management in general, but before we go any further, which of these expenses that we're about to read through should not be classified under management and general, and where should they be correctly classified? Now, again, we've talked about this in the previous 2 videos, what typically is classified in these things, and also we've talked a little bit about it in this video. So I would say this is a good time for you to pause the video. We're at question 5. Do the calculation yourself, read through these, read through the different responses, and figure out which one of these should not have been classified as a management and general expense. When you're ready, come back, unpause the video, and we'll look at the answer together. All right, here we are at the answer. The answer is A, $80,000 for coordinator salaries. That would be program. $30,000 for fundraising appeal. That should be fundraising, obviously. $50,000 for membership development. That should be membership development. Again, that might be one that you forget about sometimes because it's not super common, but it is one of the categories. And then $30,000 for rent, and that should go to program. So let's walk through why these ones should not be in management and general. The $80,000 for salaries of coordinators should be classified under program expenses because these costs are directly associated with running the foundation's educational workshops. These are coordinators who work directly to do the mission, to do the entire purpose of the organization, which is running educational workshops, or at least that's one of the missions or services that they provide. So that's why these coordinator salaries go to program. The $30,000 for printing and mailing the annual fundraising appeal should be classified under fundraising because it literally says fundraising right there. The $50,000 for membership development activities, again, it straight up says membership development activities, so that goes to membership development expenses, not management and general. And then last, you might have missed this, $60,000 for rent should be evenly allocated, and when it says evenly, I would typically assume it means 50-50, or if there's 3, it'd be 33, 33, 33. Allocated between program and management and general, meaning $30,000 goes to program and $30,000 goes to management and general. So all of this should not be in the management and general expenses for the year. The rest of it should. So if we go back up, these $25,000 of office supplies should stay there. This membership development, this printing, this salaries, none of that should stay in there. And then only half of this. So this is not what the question asked, but only $55,000 of all of this should actually be in management and general expenses for the statement of activities. So that was just another reminder of how to classify these different expenses. And we've gone over a lot. This is a bit of a longer video because those first 2 questions were kind of weighty, kind of hefty. Before we go any further, let's do one more part of the process called pillar topics. Now, the idea behind pillar topics with SuperfastCPA is as you're going through the questions to learn the material, you will notice the things that keep popping up. These are the key topics, the pillar topics that you are seeing constantly throughout the questions. They've asked 3 questions on how to know the difference between management in general and fundraising. They've asked 4 questions on how to calculate net assets with donor restrictions or different things like that, whatever the case may be. And you take a moment and you write down these pillar topics kind of as a summary of what you learned so that you know them for later and so that you understand them for the exam. So let's go ahead and look at the pillar topics for this video. All right, here we are at the pillar topics, and they're quite straightforward, fairly simple because a lot of this we've talked about in the previous video, so I just wanted to pull out a few things to remind you about in this video. When expenses related to donor-restricted programs are incurred, they should be recorded as expenses without donor restrictions, and an equivalent amount should be released from net assets with donor restrictions. This is something that I want you to remember. Though technically these expenses kind of, or in a roundabout way, reduce net assets with donor restrictions, they do not directly do it. So if you're ever preparing a statement of activities, you would be wrong to immediately just reduce the net assets with donor restrictions by the expense amount, because all expenses are net assets without donor restrictions. The real way they do it is it's net assets without donor restrictions. That's what the expense affects. And then if the expense was related to something specific like a restricted program, then they move the same amount out of net assets with donor restrictions to cover the expense in net assets without donor restrictions. But there's kind of two steps there, so that's why it's important to know that. Next, only donated services that require specialized skills and would typically need to be purchased and that create or enhance a non-financial asset should be recognized at fair value. And finally, expenses should be classified based on their purpose. Program expenses directly support the organization's mission, so if it says something about this mission specifically, or it's an expense that directly affects the program, the mission of the entity, then that would be a program expense. Fundraising expenses relate to raising contributions. Management and general expenses involve the overall administration and governance. And membership development expenses are related to activities aimed at retaining or expanding membership. You do need to know that, but that last one is probably something you'll see a lot less than fundraising and management and general expenses. But those are the pillar topics for this video, kind of a summary of some things you need to remember from watching and going over these questions with me. And with that, that is the end of this video. Before you go, make sure you go check out our free 1-hour webinar training on SuperfastCPA.com. Again, it's only 1 hour. It is free, and we will show you the key ingredients to passing the CPA exam so that you don't waste any time. This is something that a lot of people struggle with. They spend hours after work watching lectures, and a lot of our strategies are about studying in the morning, going straight to the questions so that you don't waste any time, and you will learn a lot from watching this webinar. Make sure you go check that out. Also, just a reminder, we only went over 5 questions in this video, but Superfast CPA members will have access to the full 10-question video when we post it in the members forum. So if you like this, you can get more of it by becoming a Superfast CPA member. If you liked the video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.